When you moved into your current apartment, you probably had to give a security deposit. When you get it back, try not to get too attached because you'll have to give it away again when you move to your next apartment. Billions of dollars are used for deposits, and they may as well be buried underground. It's likely no one will ever use them. Why do landlords need deposits anyway? Ah yes, in case you cause damages. But here's a silly thought. What if you could keep your deposit and only pay for damages if you actually cause damages? That would make a lot of sense. But without your deposit, how can your landlord trust you? It's actually simpler than you think. Just give your landlord an Obligo. What's an Obligo? An Obligo is a secure billing authorization that allows your landlord to bill you for damages. There's 3 important things you need to know about an Obligo. It's safe. Your landlord can only withdraw up to a certain amount of money, and unreasonable claims may be disputed, just like a normal deposit. It's binding, so you won't be able to cancel the Obligo before its expiration date unless your landlord agrees. Lastly, it's guaranteed. Obligo always pays your landlord in full as soon as a claim is made. If you're short on cash, Obligo can bill you in monthly installments. Got it? All right. Obligo charges a small monthly fee from the tenant for this service, which depends on the tenant's personal risk profile as well as the size of the Obligo. High-risk tenants might not be eligible to use Obligo at all, while low-risk tenants can expect to pay extra low fees. Finally, your Obligo is set up and you can have your deposit back at a click of a button. Just one more thing left to think about. What are you going to do when you get your deposit back? Visit our website and get your deposit back today.
You've co-founded this company with your brother.
Yes.
How's that going? Can you tell us a little bit about it and how you got started?
Yeah, usually that's a taboo for investors, right? They don't like companies set by brothers, but actually we're pretty far apart. So we're 8 years apart. When I joined the Army, Omri was 10 years old, so we never really communicated too much. I ended up being a fighter pilot, so I was there for 8 years. And by the time I came home, Omri was in the Army. He went to 8200. So we really didn't communicate too much before this startup. And we were always laughing about how the first 2 weeks of the startup, we communicated more than we did in the previous 30-something years. So that's kind of refreshing. Maybe a little bit more of a personal background. So after the Army, I went to study economics and went into hospitality and real estate. And Omri was a Technian guy, always developing from a young age. Ended up going to work for Google in the Valley, Google in New York, Facebook in London, and then some cybersecurity work in Tel Aviv. The idea came from Omri, and he was traveling around the world. He saw the inefficiency of security deposits. Many don't know this, but in Israel, a lot of times you don't actually pay the money to your landlord in a deposit situation. You just use different checks and open checks and things like that. Israelis are always trying to figure out a way to avoid that payment. But as you guys know, in the United States, basically everywhere else, people need to front a lot of money to the landlord. And it's clear that renters don't like the situation. Many don't know that landlords are not enjoying that money as well.
So, you're developing a new financial standard to replace the security deposit, as you just mentioned. Explain what that means and how does it impact both the landlord and the renter, the tenant using the company?
Yeah, so we took inspiration from hotels. You go to a hotel, you check in, you don't pay a deposit, right? You swipe your card, they allocate some credit, and then if you don't drink the minibar, they don't charge you. And if you do, they charge you when you check out. So it's quite clear that it works very similarly to a mechanism of security deposit, meaning the renter is accountable. If anything happens, it's not only that the hotel knows that they're going to get paid, they also know that the hotel guest is going to behave because they're on the hook. And that's exactly the kind of mechanism you want to have if you want to replace deposits. What we had to do is we needed to extend the time period of a mechanism like that, and also not block the credit cards so people would actually be able to use the money. So we ended up going towards open banking technology, not so much credit cards. what happens today is like you saw in the video, the renters give us a bank account and a credit card. We have the ability to do some screening, so to see the liquidity on those payment methods. If they qualify to our service, they don't need to pay a deposit at all. Instead, they pay us a small monthly fee. That creates a very good efficiency on the renter side, because move-in costs today are very high. And if you look at COVID, it's even more important to be able to lower those move-in costs. On the landlord side, a ton of regulation basically doesn't enable the landlord to do anything with the funds. They just put them in escrow accounts, and then there's a lot of processes around taking it and storing it and returning it to the renter when they move out. Just a ton of burden. And they also understand how effective it would be to promote deposit-free properties. If your property is deposit-free, as a renter, this is very appealing to me, and good things will happen by doing that. So that's kind of a win-win situation right there.
How do you manage the credit risk, especially now during COVID, when renters have the ability to delay?
Yeah, it's a huge question, actually. Very, very, very interesting question. First, we need to understand the risk. What is the risk that Obligo takes? The risk is comprised from two different risks that you need to multiply. The first risk is the risk of a charge. In many cases, usually renters get their money back at the end of the lease. A very small portion of money goes to the landlord. Usually, without COVID, we will see around 10 to 15% of the money. If I'm a landlord and I have $1 million, I will only take $150,000, $100,000 from those renters. So that's the first risk. We can call it the insurance risk. The second risk is, okay, now we have those pre-authorizations on multiple payment methods. And then how many people that are supposed to pay this from the pre-authorized payment methods are going to default? That's a credit risk. So when you multiply the insurance risk with the credit risk, usually you get a very low, just very low write-off. And then what happens now is the insurance risk is not that different. If you look at damages, it is different on rent payment, obviously. And when you look at default rates, they're also up. So what we had to do on our model is almost quadruple the risk and the write-off chances in the model. And what that made us do is adjust a couple of things in the actual day-to-day operation. I'll just name them very quickly so I don't take too much time. The first thing we did is we made it a little bit harder to qualify to Obligo. So renters need to have a slightly higher credit score, a little bit more money in the bank to qualify for a regular service. The second thing we did, which is very interesting on the landlord side, we carved out things like rent in case landlords wanted to return deposits, like we saw in the video. If they wanted to return deposits to their existing renters to provide relief, and so that those renters could pay them rent, we wouldn't be able to backstop rent at that point moving forward. And landlords understood that. They already got the rent from the deposit. And now we told them, from now on, you're going to be able to use it for damages only. And that reduces our risk substantially. So we created a situation where both sides, renters and landlords, contribute to risk reduction, so we can free up all that cash. As at the end of the day, it benefits both. It benefits the landlords because they want to get paid for rent. It benefits renters because they want the lower move-in costs and they want to be able to pay rent.
Why don't landlords buy an insurance policy similar to those that Airbnb hosts buy for their tenants? Is it cost complexity, assurance of payment?
Insurance solves a part of the problem. It doesn't solve the whole problem. You don't want a covered renter. It's a little bit confusing for renters as well. By the way, if you read the policy, you'll see that the renter is actually not covered. But it's important to be very transparent about it if you want to incentivize the right behavior from those renters. So that's kind of the first reason we didn't want to go towards insurance. We ended up going towards the credit route. Again, we saw what was going on in hotels. We said, this is a good solution. How do we know it's a good solution? Where you're not going to find a hotel anywhere in the world that is still taking payments in cash when people are checking into rooms. It has become the new standard. It is actually a better solution. It's simpler and it's just seamless. And so if we can find a way to use credit, the problem is solved. And that's why we need, instead of insurance licenses, we need credit licenses in all different states. Again, another layer of complexity for us operating the business. But I think all these hard things end up being moat of the company, and that's why it's harder to build these kind of platforms.
What kind of role do you see your company playing to alleviate concerns from both landlords and tenants during a COVID sort of a market?
Yeah, it's actually, it's been pushing us. I think you need to understand the scale of the problem. There's billions of dollars. New York alone is $5 billion locked away any given moment in time. Again, renters not enjoying anything and landlords not enjoying it. It's just there. And if we can free up this cash now in this environment, it's so important. And the reason why both parties are interested in this money being freed is the landlords are concerned about not getting paid. They want to get paid for rent. So for them, it almost makes sense to return the deposit to the renter to help the renter pay them rent. And at the end, it's just so efficient, and it's so easy to use that money. If you look at other kinds of things that the government is trying to do, they're trying to send checks, they're trying to work a lot of mechanisms. This money is already deployed in the market. The only thing you need to do is tell a landlord to put the money from this, take the money from this account, put it in the other account, and you solve the problem. And I think that's why we're seeing a lot of landlords using it. Again, just to kind of explain the use cases, one thing is they want to lower moving costs. They just want to be able to move. You want a renter to move at this environment. You want that renter to pay less money. And the second thing is existing renters, whether you want to incentivize renewals, so you want to get a renter to renew the lease and you're giving them the deposit back as almost a concession, or you're just trying to provide some financial relief, which is again another way of doing that.
So you mentioned some of the the partners that you have. Can you get into that in a little bit? Who are you working with so far?
Yeah, our model is obviously we want to work with big landlords, and then those landlords can basically sell the product for us. Every time a renter moves in, they would offer them the option to use our service. We work with huge landlords like Stuytown is the biggest landlord in New York. We work with the Kushners, Westminster's is a recent client, and Common Living is a very interesting company that is growing nicely and does a lot of co-living, which is another interesting model in real estate. And we're expanding, so we're talking with a lot of landlords these days, trying to offer them a solution for the new renters as well as existing renters.
Does Obligo work with commercial leases as well?
Oh, it's a great question. We get asked that a lot. Unfortunately, we don't. It looks like it could work, but it's a lot harder to underwrite businesses. So while individuals that rent apartments and live in them usually behave the same, if you look at a bank account, almost tells you the whole story. If you're trying to figure out what's going on with a company, you'll have to invest a lot of time in underwriting that company to understand if they're going to be able to pay rent. And the other reason we're not doing it is because those companies a lot of times have other solutions and the ways to get credit, which is on par, similar to the cost of our service. So they might consider just taking a loan versus versus using our product. So these two things create a little bit of a mismatch, unfortunately.